few weeks ago, I presented a video how is tax calculated in retirement. If you missed it, here is the link. Then I received an email from Abut. I do hope I said your name correctly, who asked me this question. According to your statement on the video, there is no tax on the $50,000 from superannuation income stream. However, in my situation, I'm retired already a few years back and receive approximately $46,000 from my Commonwealth superannuation. And it is fully taxable. I wonder why my income stream is taxable and the guy Sven in your video income stream is tax-free. Please clarify the difference between the two income streams. First of all, thank you, Abud, for so well-defined and detailed question. It is so much easier to answer such a question than the one that is of generic nature. So today I will try to answer Abud's question and we will continue discussing retirement income streams in Australia. My name is Katherine Isbrandt from About Retirement. I'm certified financial planner and you are watching About Retirement TV, the place where you can learn lots about financial issues, problems or choices that you might be facing when preparing for your retirement or during your retirement, and what choices you have available to improve your financial outcomes for a better, longer and more enjoyable retirement. Okay, so let's jump into our today's topic, tax in retirement income streams. As we all know, as per my explanation in that video, how is tax calculated in retirement, after turning your superannuation savings into a retirement income stream, generally there is no tax to be paid on income received. Most income streams do not pay any tax on payments made to members, on lump sum withdrawals or on earnings made within the fund. But this rule does not apply to all income streams, and if you used to work for a government in any capacity in the past, it is very likely that you might have been provided with the compulsory superannuation that were defined benefit funds, such as, for example, Commonwealth Superannuation Scheme Fund, Military Superannuation and Benefit Scheme, Public Sector Superannuation Scheme, part of Uni Super Funds, and the WA-based Gold State Super and West State Super. So what is the difference between a normal accumulation superannuation account that most of us have and a defined benefit super scheme provided to employees of the Commonwealth Government and most people working in the public sector? Well, the accumulation superannuation account is the account that accepts different types of super contributions. Then the balance is invested according to members' choice and the outcome depends on the market returns and earnings made over time. Defined benefit funds are different, as their final benefit will depend on other factors, such as years of service or the final average salary or both. Therefore, the final outcome is predetermined and calculated based on certain formula rather than investment outcomes. You might think that this is a fantastic superannuation outcome that the government invented for themselves. And in most cases, that is true, apart from one tiny little detail, tax. I have been talking about superannuation in great deal on this channel, and I have explained different types of contributions you can make to your superannuation. Therefore, you should know by now that there are two types of contributions: concessional, otherwise known as pre-tax contributions where someone claimed a tax deduction, and non-concessional, otherwise known as personal after-tax contribution or tax-free contribution. Well, a defined benefit super and pension account will very often have what we call an untaxed element. And that is where the issue of tax and that Abud is mentioning in his email. Why is this an issue? In the world of employment outside of the government or public sector, when an employer contributes to super, the fund automatically pays the concessional contribution tax of 15% to the tax office. However, this has not been happening in defined benefit super funds. When working for the government or in any public sector, your employer, so the government, would make those contributions but somehow forgot to pay their tax. Well, let's be honest, the government hasn't really forgotten, but most of those contributions were done on a piece of paper as accounting calculations only. So there was no real money ever invested. Therefore, no tax has been paid. It was much easier to calculate that final benefit based on years of your service or multiple of your final salary. Therefore, you have a situation that contributions were made, well, at least recorded, no contribution tax had been paid over the years, and once you got to your retirement, your defined benefit super or pension has included an untaxed element. So now in your retirement, the tax office wants to get their share of that lost tax. That is the reason why Abud is taxed. That is a reason why your defined benefit pension is taxed in your retirement. Therefore, if you are over the age of 60, retired, and receive income from your defined benefit pension, you might have all three components within your pension account. So now, when your pension payments are made to you, there will be no tax to be paid on your tax-free and tax component, just like any other pension account, but the tax will be charged on this untaxed element of your pension payment, which would be taxed at your marginal tax rate less 10% tax offset, which is also subject to defined benefit income cap. The defined benefit income cap is complicated, and if you are affected in any way, make sure you search for a good financial advice, as superannuation caps are beyond the scope of a general advice of my videos. Defined benefit pensions are some of the best retirement income streams, as pension payments are guaranteed for life and often might continue as partial payment for the life of your spouse. And income is paid irrespective of market returns. That is a huge benefit. I hope, Abud, I answered your question and questions of many other listeners that have a defined benefit pension. If you found this video helpful, please give it a like and subscribe to this channel to stay informed of all the changes that can impact your retirement. These days, it is unlikely that you have a choice of defined benefit pension. This is such a huge cost for the government that those pensions have been removed and are no longer provided. However, you could instead be participating in a defined benefit super scheme with no pension option available, but with the final benefit still calculated based on that formula rather than market returns. On retirement, it is most likely you will be asked to move your full balance to a different super provider. But keep in mind that there will be immediate tax consequences. Therefore, it is imperative that you receive the appropriate retirement advice to know how to structure your income stream considering tax, your future income needs, and age pension if applicable. If you want to learn more about retirement, just jump on my website aboutretirement.com.au, where you can find hundreds of articles, videos and calculators to help you in your learning journey. While on my website, please sign up to the newsletter that is coming out fortnightly. So again, you can keep up with those changes that can impact your retirement in Australia. Also, if you have a burning personal financial question or simply would like a professional retirement advice, either as a strategy or investment management, organize a meeting so we can discuss your personal circumstances and find the best solutions. On each page of my website, you will find a button Book a Meeting that will take you to my personal calendar where you can choose the day and time of our meeting. And now please go back to view that previously mentioned video, How is Tax Calculated in Retirement? A very important retirement piece of information. And on the other note, I think my previous video, although different, is the one that everyone should watch. Technology impacts your money decisions. So are you good with technology? If you think that you are great with technology and you know it all, well, you might be surprised. I was. So please watch it and I will speak with you in my next video. Bye.